rocky road to the public market. High-profile unicorn companies, those worth $1 billion or more, including Uber, Lyft, Pinterest, all eyeing entering the public markets this year. But they may run into trouble, and it's not just market volatility to blame. The partial government shutdown could cause major headaches for these companies. Joining me now, Tingler Wealth Management Chief Investment Strategist Nancy Tingler. Always a pleasure to see you, Nancy. What's going on here? Why would the government shutdown hurt these companies going public?
Oh, thanks, Dagan. Well, of course, the SEC is one of the agencies that is not funded at the moment. And so any SEC registration, new IPO, has to go through the SEC. And so there's a backlog. And then you add into that market volatility. And I think, we're going to see a little bit of a pullback in terms of expectations. This was supposed to be the second most robust year at about $60 billion in new IPO offerings this year versus 2014, which was $85 billion. That was the peak. And so we're kind of expecting to see things slow down at least in the first quarter of this year.
Nancy, it's Kevin here, and I think one of the most fascinating aspects of this market is that we actually need these IPOs because the venture capitals have to exit their investments, right? And one of the best ones we've seen actually was Twilio over the past year. It's done exceptionally well. I'm interested though where you're looking to place capital today. I mean, one of the fascinating aspects is we had a robust holiday shopping season. So where I'm allocating my money is into the industrial REITs because you have a gold rush for warehouse space. Because if I order something online, I want it in 24 hours or less. And so, I put money in Prologis and into the industrial REIT ETF, INDS. Where are you putting your money? Because I think that we need actionable ideas to figure out how to navigate 2019.
Amen. Nancy, go.
Yeah. Oh, that was easy, Kevin. Thanks so much for the setup. Yeah, listen, I mean, we have been looking for things that benefit from a strong consumer. It's not all that creative. And the consumer is one of the most reliable aspects of this economy as we all try to figure the industrial space out after the ISM numbers yesterday. So we've been adding to what we think are Amazon-proof kinds of retailers. So Home Depot, Walmart. We actually were sellers of Costco because it got, pretty lofty from our valuation standpoint. We've been poking around at Tiffany despite the China worries. And so those are, Starbucks, those are some of the places we've been looking. But I think you raise a really good point. There's a supply issue in terms of stock. Companies are buying back their stock. We've had a slowdown or not as much in terms of IPOs. And so I do think that this is going to be a really interesting aspect that for investors, if we can get some of these IPOs in and some of the larger ones, then folks like us can put our money in. But, last year we saw some of them get snapped up before their IPO. So like Microsoft buying GitHub and SAP picking up a new IPO. So before it went to IPO. So I do think that's going to be really interesting as well to see if the companies go in with all their cash and buy these things before we can get our hands on them.
I'll be interested to see, and this is not a Republican-Democrat thing, but if lawmakers down in Washington, given what has gone on in the last year with a lot of these giant technology companies, if the Federal Trade Commission starts putting its foot down about potential acquisitions in the tech space. So maybe those companies do go public because the big companies have gotten so big. I think that the government is waking up to the fact that, wait, why didn't we intervene or take a closer look at a lot of these acquisitions ahead of that? I think that's something to think about in the new year. Deirdre, I know you have a question.
Nancy, I was just curious. I mean, Uber is really the biggest one, right? I mean, there are some analysts who say this company could be valued at as much as $120 billion when it goes public. So the company has crazy revenue growth, right, but still posts net losses. So just as far as how it's going to be received, what is your take on that?
Yeah, Deirdre, it's interesting because I've been thinking about that one a lot. I would make an argument that Uber is no Amazon, and yet we must remember that Amazon started out just selling books, right, and has expanded. So I do think that at some point investors are going to say, that we start approaching that eyeballs internet peak kind of bubble issue where they go, well, okay, revenues are one thing, but at some point we need profits. And Uber's had a lot of stumbles, corporate governance-wise. So we had written a piece that was, saying that technology is to this new administration as oil and energy was to the last administration. And we were net sellers, but we didn't sell enough. of some of the Facebook, Google holdings that we have. So I do think you're right. I think there is an issue. I think Dagan's on to something that the legislators are going to have to take a fresh look. And the problem is they don't really understand technology. So when these CEOs come in, they've been alley-ooped by, the head of Google and even to some extent Facebook. So we'll see.
Right.
Nancy, question for you, and thanks for joining us today. So I think for folks at home who are watching this, right, who are like, I want to get on this IPO, I take Uber, I want to buy Uber, how do they get into this market, especially given, like you said earlier, that, these companies will come in and buy up a chunk of their stock before it even hits the market? So how do folks at home get in at the ground level for many of these IPOs before they go public?
No, it's a great question. Of course, the question that we should be asking is, do we want to get in? Last year, the 100 IPOs, the last 100, 65 are down, and the class of 2018, I think, returned about 2.8% last year, which compared to the S&P, which was down 4.5%, was something, right? But it is difficult because you have a Tilray that's up 350%, and then you have a Blue Apron that has went public around 10 and is now 78 cents a share.
Wow.
So I think for the average investor, you have to kind of sit back because the really smart money will get in and will get out very quickly. So you have to sit back and look at how the thing trades for the first few months at least.
Right.
Patience is a virtue.
Put cash.
Right, and Nancy, I'll point something out. The viewers would know that Snap was going to be a dog before it ever started trading, watching Kevin Kelly, and I think me to a lesser extent on this very program. And it's possible, Kathleen Smith from Renaissance said this, Nancy, real quick, that it's possible that you see the IPO market is just closed for new issues in the first months of the year if this kind of volatility doesn't clear up. And this is outside of the government shutdown.
You're dead right, Dagan. I mean, I would be, if I were going to take my company public, I wouldn't be doing it in this environment. So I do think we're going to get a natural market slowdown, and then we've got the regulatory slowdown. I actually think that's good for stocks because a robust IPO year is usually one of the signs of a blow-off. So I'd like to see him slow down.
Nancy, great to see you, as always.
Thank you. Thanks
Next
for
time,
having me.
you're welcome here in New York anytime, but however you can join us, it's much appreciated. Nancy Tengler.
Thank you.